Abneesh Roy is with us. Abneesh, I have two numbers with me at hand right now for ITC. A 10,810 crore rupee top line growth number with a PAT at about 2,930 crores. How does this work for ITC based on your estimates?
Yeah, so PAT is exactly in line. Sales slightly lower. We would need segmental sales to get more details. But definitely PAT is absolutely in line, and EBITDA also broadly in line. So on the both the profit numbers, it's in line.
That you're expecting, more importantly, by way of the overall cigarette volume this time around, because it could be a tad discouraging. What's the expectation, Abneesh?
Yeah, we were expecting a slight dip in cigarette volumes. Because last quarter also there was a 5% volume dip on a flat base. So we are waiting for segmental numbers.
Okay.
So we are expecting slight dip, around 1 or 2% dip in the cigarette volumes.
Numbers, in fact, Abneesh, I'm just going to run them for the benefit of our viewers. We have the net sales, which has come in at 11,039 crore rupees. I think this has come in below expectations. So revenues is below expectations. EBITDA margins has come in at 37.5%. That has actually been able to impress the street pretty well. And I would say the net profit has come in line with expectations. I think that would be the verdict when it comes to ITC. Profits have come in at 2,932.7 crore rupees. So just to reiterate once again for our viewers, revenues has come in below expectations, margins have come in above expectations, and net profits have come in line with expectations. There are no exceptional at this point of time, which I can see on my screen right now. Abneesh, I'm also going to just tell you what exactly segment wise the company has done. I guess that would also give us a fair idea of what the company has done in terms of revenues. So the cigarette revenues has come in at 4,936 crore rupees, and compared to the corresponding quarter, of course, which we can't do because of the fact that there's the excise duty component. But yeah, 4,936 crores is where the cigarette revenue has come in, and 3,051 crores is where the other FMCG revenue has come in. Your take on these two numbers?
Yeah, I think we need to see in more details because just numbers have just come. So I would say that some dip in volumes may be there, slight dip. So last quarter also 5% dip was there. So maybe slightly closer to that. But you need to see in greater detail because numbers have just come. We need to run it through a model.
View coming in on some of the internals for the numbers. Kaustubh as well is with us, and he joins in to assess the earnings. And our assessment, Kaustubh, is that this time around you've seen the top line growth come in a little bit below. The profit number seems to be pretty much in line at 2,933 crore rupees, while margins have come in fairly healthy above street estimates. How are you reading into the numbers?
I think 2,930 crores of PAT, I think it is better than what we were expecting for the quarter. I think it came at about, our expectation was about 2,800 crores. So I think the PAT growth must be somewhere about 7-8%. I think it is better than what we were expecting for the quarter.
Right. So yes, that of course is the numbers for you, Kaustubh. I also do have the margin figure of 37.5%. That's a pretty impressive number. What do you think may have led this margin expansion to come by?
I think margin expansion is pretty good and it is much better than what we were expecting. I think largely it must have come through the better, profitability of the non-cigarette FMCG business. Even hotel business was expected to do well because Q4 is seasonally strong quarter for the hotel business, and I think hotel must have done well. And it is mainly because of the better revenue mix. I think they have done well at the margin level.
About the hotels business, I do have the revenue number over here of the hotels business. It's come in at a number of 408 crore rupees versus 386 crore rupees of the corresponding quarter. And do remember, there was a lot being said about that part of the business as well for ITC, about how it could possibly be a hidden gem of sorts when it comes to ITC's numbers. Abneesh, over to you. I know, it's going to be difficult to assess what exactly the cigarette business has done, given the fact that the corresponding quarter did have that excise duty component. So the numbers naturally are going to be extremely different and extremely divergent. But just a rough assessment on your side, 4936 crores is what the cigarette revenues has come in at. How are you viewing this number?
Yeah, I think it's inline numbers largely because in Q3, if you see, they did 4629 crores. So if the number you are saying 4936, there is a growth on quarter also, because currently that is one trend also we need to see because of the tax changes. So I think broadly, I think inline only. I think slight dip might be there in the cigarette volumes.
It's a fair point actually, because given the tax changes, one could also even perceive the cigarette revenues on a sequential basis. 4936 crores in the current quarter, 4629 in the previous quarter. So I think that could be as well one way to look at it. Abneesh, your take on the margins? I think that certainly is a standout point in ITC's Q4 numbers.
Yeah, I think that's how cigarette companies in India and globally, that is a big focus, especially in tough years. So I think, yes, cigarette margins and overall margins clearly on track, and I think FY19 in terms of cigarette volumes also there should be some recovery, because till now we have not seen any increase in the GST in the budget. So I think, yes, margins clearly company continues to deliver.
Abneesh, what's your view on the FMCG revenues? It's coming at 3,051 crore rupees. Mostly we've seen a trend at, around 2,800 odd crore rupees. But this time it's at 3,000 crore rupees. Do you believe that going forward, it's the other FMCG business that's really going to dominate the numbers? Because the pie certainly has moved quite a bit in favor of FMCG companies, rather the FMCG part of the business as opposed to cigarettes.
Yeah, FMCG, if you see this quarter, almost all the leading companies, Dabur, Unilever, and even in discretionary consumption space, if you see Asian Paints, have definitely surprised on volume growth. ITC also would have seen that benefit. And going ahead in FY19, ITC's new product funnel will clearly accelerate. So I think, yes, ITC is well placed. Only issue is in ITC is still cigarette business drives the stock performance, because that's the 85% of the profit. So yes, in terms of sales, clearly I think recovery, rural recovery has been called out by Unilever. Dabur has also seen good recovery. So I think ITC is well placed to see the same thing in FY19.
A smart reaction after the overall numbers. In fact, it's at the highest point of the day. Tell you what, let's take a bit of a detour. Thank you so much, gentlemen, for joining in and connect with the management of NIIT Limited. We have Mr. Sapne.